Okay guys, so in today's video we are going to do standard called International Accounting Standard number 10. So basically this standard is all about event that happen or occur after a reporting period. Okay, so I'm going to simplify for you, so make sure that you stay tuned, watch until the end of the video so that you will learn some basic principle under this standard. So I'm going to do some examples so that you can be able to answer any kind of question that you have. Okay guys, so when we talk about IAS 10, simply means that we are talking about event after reporting period. Okay, maybe before we go to some basic principle under this question that I have, let's start by try to understand what are they saying when they say event after reporting period. Remember guys, each and every company have its unique reporting period. For example, we can use a period from 1 January until 31 December. Okay, a year we can just say this is a year 2024. Okay, so when they said event after reporting period, this is the event that happened after our year end. Okay, this is our reporting period. This we call it reporting period. Then after 31 December is gonna be 1 January 2025. This is called after reporting period. However, we also have what we call authorization. Okay, authorization date. Okay, in this case, let's just say is 31 March 2025. Okay, why do we have authorization date? Remember, this is the period that we've been given to do what? To prepare our financial statement. And we have a procedure that's called authorization. Someone must take those financial statements and do what? Approval. So this is the date that we are waiting for what? For approval. So the event that happened during this period is called event after reporting period. We need to check the principle of IAS 10 in order for us to follow. What do we do in this kind of adjustment? Some of them might be adjusted here under this period. Some of them might not adjusted under this period. So you need to understand which one are we going to adjust, which one are we going to ignore. Okay, number one, they said a definition of reporting period referred to period covered by financial statement is typically end on date when financial statements are authorized for assurance. Okay, this is what I was talking about. Then we have two kind of event. Number one, we have adjusting event. Adjusting event, guys, we are talking about event are those that are provided further evidence of condition that existed at the end of reporting period. They require adjustment to the financial statement. In other words, if you find that this kind or this nature of this transaction is adjusting event, which means that you need to go back to your financial statement and do adjustment. So non-adjusting is opposite, obvious. So how do we see that this is adjusting? This is adjusting event. How do you see? Number one, action that happened from this reporting period but actually happened this period, we need to adjust. For example, guys, a building that has shown a crack during the year. During the year, the building showed the crack, but it didn't fall. It fall under this period of after reporting, which means that we need to do what? To adjust, because there was a what? Indication. If there was indication, guys, this is the key word. Indication. If there was any indication that this building will fall, event will happen, we need to do what? To adjust. Okay, when we talk about non-adjusting event, this is a event that does not have what? No indication. For example, something that happened due to nature, something like accident, floods, something like that. There was no indication that accident will happen, which means that we don't have to do what? To adjust. We assume that this must be adjusted in this period, not in the previous period. So this is the major key that you need to understand. Okay, let's conclude by doing these 3 examples, guys, so that you will understand more basics when it comes to IAS 10. All right, example, we have a reporting period which started 1 January 2023 and ending 31 December 2023. The authorization date is set to be 31 April 2024. Okay, then transaction number 1, they said on 4 February, one of vehicle involved in an accident. Firstly, we check if this date is under what? Our event after reporting period. If we need to adjust IAS 10. Okay, 4 February 2024 is after 31 December and is still within before authorization date, which means that yes, we need to check category whether it's adjusting or non-adjusting. But in this case, it's going to be non-adjusting because there was no any indication, guys, that accident will happen. Very simple. It's non-adjusting. We're just going to do a disclosure. Okay, number 2, court case of manager VL started 28 June 2023 and has been finalized on 14 January 2024. Is between reporting period and authorization date. Company will compensate 500,000. Do we adjust or not? Yes, we are going to adjust. The reason is because it's between 31 and this one. And the category is adjusting because there was an indication that they can lose the case or they win the case. So in this case, they lose the case, which means that the compensation of 500,000 must be adjusted under expense. Okay. Number 3. On 6 May 2024, building that cracked since 2023, since here, there was indication, yes, has been collapsed. Okay. 250 of impairment. Okay. So 6 May, guys, we found that 6 May is after authorization date, which means that IAS 10 is not involved, which means that it's not going to fall under any category. We're not going to do anything because it's not falling under IAS 10. Thank you so much, guys, for watching. Please just appreciate me by subscribing, like this video. You're gonna see more standard, and I'm still going to continue with IAS 10. I'm gonna come with kind of different question papers so that you will learn more. See you on the next one.